You think you know Wall Street. You read the headlines, you see the towers, you hear the numbers. But what they don't tell you, what they can't tell you, is the real price of entry, the brutal selection, the silent culture. The nights that break most men. You're at Goldman Sachs. That means you're an expendable weapon, pointed wherever the firm needs leverage. That's just the start. You'll soon understand why the best analysts only last 2 years, and what they become after. Welcome to the invisible war. You're at Goldman Sachs. That means you're an expendable weapon, pointed wherever the firm needs leverage. A tool, nothing more. Acceptance rate, under 2% for analyst roles. From top schools, flawless GPA, Target University, a dozen internships. The initial filter is your resume. The second is the interview gauntlet. Endless brain teasers, market questions, technicals until your mind goes numb. They aren't looking for smart. They're looking for unbreakable. They cut you when your eyes betray fatigue, not when you make an error. The moment most candidates fail isn't in a bad answer. It's when their guard slips for a millisecond, revealing the human beneath the veneer of ambition. They see it. You're out. Gone. The unwritten rule. Your life is a resource. A fungible asset. Hierarchy is absolute. BMD is a god. The VP a demigod. You're the grunt. You perform. You execute. You don't question. Ever. The silent test happens constantly. Who stays latest, replies fastest, delivers the pristine deck at 4 a.m. without complaint. Fit here isn't about personality. It means you internalize silent suffering. It means you understand that your existence is purely transactional. You're paid to be a cog. A very expensive, very disposable cog. It's 3 a.m. Your office is a tomb of glowing screens and stale coffee. You're deep into a merger model. Billions on the line. One bad sell, one miscalculation, and the entire deal collapses. Sweat beads on your forehead. Your eyes burn. Then you see it, a red error message. A broken formula. It's cascading. The MD is on a private jet, unreachable. The client is expecting a final model by 7 a.m. Your team, half asleep but watching, is waiting for your move. You feel the weight of every investment bank on your shoulders. The clock ticks. The silence amplifies the hum of the servers. This isn't a drill. This is real. Your decision, hunt the bug, recalculate, or call the associate and admit failure. There is no failure. Only solutions. Paradox. You gain unparalleled access to global power and wealth. You lose your identity, your health, and your personal life. Nobody warns you about the second part. You're at Citadel. That means you're a data assassin, measured in basis points, discarded for milliseconds of hesitation. Acceptance? Less than 1%. Often from PhDs in astrophysics, math Olympiads, or X-Tech titans. This isn't about pedigree. It's about demonstrable, quantifiable edge. The interviews are less about questions, more about real-time algorithmic challenges, coding sprints, stress tests of your predictive models. They cut you when your P&L doesn't hit its internal targets for 3 consecutive days. Not weeks. Days. Most fail trying to rationalize a momentary dip as a long-term learning curve. There is no learning curve. Only performance, immediate, absolute. The unwritten rule. Your intelligence is only valuable if it translates to immediate profit. Hierarchy exists, but performance overrides everything. The loudest voice is the one with the biggest P&L. The silent test is constant, real-time P&L screens. Monitor every trader, every quant. Your numbers are always visible, always compared. Fit means you thrive in a gladiatorial arena. It means you're comfortable with zero loyalty. The firm will cut you the moment your edge dulls. No questions asked. You're a peak performer, or you're gone. Instantly. It's 1 a.m. The market is closed, but your algorithms never sleep. Your screen flashes red. A core position, leveraged into the billions, is moving violently against your models in after-hours futures trading.
Is it a market event or is it a holiday?
Oh, your head Juan is on vacation.
The risk desk is pinging you relentlessly.
The P&L is bleeding. You stare at lines of complex code, searching for the glitch, the single character that could cost the firm billions by morning. The air conditioning hums. The only sound is the frantic click of your mouse. Your decision: override the algorithm manually, risking human error, or trust the system to correct, potentially doubling losses. Time is a luxury you don't have. Paradox. You accumulate immense wealth at an accelerated rate. You live with an ever-present, crushing anxiety that your edge will disappear overnight. Nobody warns you about the second part. You're at Blackstone. That means you're a corporate predator, hunting undervalued assets, leveraging debt, and extracting maximum value. An architect of empires, acceptance rate below 0. 5% for pre-MBA associates. You don't get here from undergrad. You get here after 2 years of brutal investment banking or elite consulting. The selection process is a test of endurance and intellectual ruthlessness. Case studies, LBO models, due diligence reports until your vision blurs. They cut you when you miss the hidden risk, the single fatal flaw buried deep in a data room. Most fail when they pitch a deal they don't truly believe in, or can't articulate the brutal path to value creation. Authenticity, even if it's ruthless, is key. They need to see the humber, the unwritten rule: every asset is a puzzle to be solved for profit. Hierarchy is about deal experience and rainmaking ability. The partners are the apex predators, and you are their apprentice. The silent test happens in every internal memo, every presentation, every late-night model review. You are constantly proving your deal instinct. Your ability to spot a diamond in the rough. Fit means you understand leverage, financial engineering, and the cold, hard logic of profit. It means you embrace the long game. Deals can take years. It means you're comfortable with taking over entire companies, then dissecting them for maximum return. Unsentimentally, it's 2 a.m. You're in a windowless war room surrounded by stacks of due diligence binders for a multi-billion-dollar acquisition target. You've been sifting through thousands of pages for 18 hours straight. Your eyes ache. Your associate just flagged a line in a footnote, a contingent liability, buried deep, that could wipe out 20% of the projected returns. The MD is on his way in, expecting a green light, a firm recommendation. Your team, billions allocated to this deal, hangs on your analysis of this one obscure clause. The air is thick with anticipation. Your decision: bury it, hope it's negligible, or risk the entire deal in his fury. There is no middle ground. Only consequences. Paradox. You gain the power to reshape entire industries and economies. Your life becomes dictated by endless deal cycles, constant travel, and the relentless pursuit of the next acquisition. Nobody warns you about the second part. You're at JP Morgan S&T. That means you're a market operator, reacting to chaos, making instantaneous decisions measured in basis points and seconds. Acceptance rate? Often under 1% for desks. This isn't about traditional smarts. It's about instinct, mental fortitude under duress, and a visceral understanding of market psychology. The interviews are simulated trading scenarios, rapid-fire questions, psychological profiling to gauge your risk tolerance. They cut you when you hesitate, not when you're wrong, but when you freeze. Most fail trying to rationalize an emotional market with academic logic. The market doesn't care. Only your reaction. The unwritten rule. The market is always right and you are always accountable. Hierarchy is fluid based on P&L and market insight. The most profitable trader, regardless of age, gets listened to. The silent test is the P&L screen, updated in real time. Every tick, every move, reflects directly on your book. Fit means you live for the rush, the volatility, the high-stakes gamble. It means you can execute a multi-million-dollar trade on a whisper without a moment's doubt. It means you're comfortable with instant feedback, success or failure, delivered immediately, constantly. It's 6 a.m. The trading floor is still mostly dark, but your screens are blazing. Futures markets are open, and a surprise geopolitical event just broke across the wire. Oil prices are spiking. Currencies are swinging wildly. Your client, a massive institutional fund, needs to execute a complex, multi-leg derivative trade now to hedge their exposure. They're on the line, demanding action. Your position limits are screaming red. Your brain processes a dozen variables simultaneously: liquidity, bid-ask spreads, counterparty risk, the client's urgency. A millisecond of hesitation could cost millions. Your decision: execute the order as requested, potentially blowing through your own risk limits, or advise the client to wait, risking their trust and a lost commission. The phone rings again. The market isn't waiting. Your P&L isn't waiting. You pay and all-star game the potential for instant, life-changing wealth, far beyond your peers. You lose all semblance of job security, operating constantly on the knife edge of performance, knowing one bad day could end your career. Nobody warns you about the second part. These are the moments that define the battlefield. These are the nights that forge empires and break men. Goldman Sachs. The broken model. It's 3 a.m. A red error flashes. The merger model is broken. Billions on the line. The MD is unreachable. Client expects it at 7 a.m. You're alone. The silence screams. One wrong fix, and you're gone. The Sarcer Citadel. The bleeding position. It's 1 a.m. Your screen flashes red. Billions are bleeding. Your algo is failing. Is it code or market chaos? Your head quant is gone. Risk desk pings relentlessly. Override or trust the system? Your decision. Now, Blackstone. The hidden flaw. It's 2 a.m. You've sifted for 18 hours. A tiny footnote hides a contingent liability. 20% of returns at risk. MD expects a green light. Your analysis, your call. Risk his fury or bury the truth? JP Morgan S&T. The market swings. It's 6 a.m. Geopolitical chaos. Oil spikes. Currencies swing. Client needs a multi-leg hedge . Now position limits scream. Hesitate and millions vanish. Execute and risk limits blow. The market isn't waiting. The numbers are stark. Analyst acceptance rates at top firms hover below 2%, often closer to 0. 5% for elite hedge funds. First-year analysts log 90 to 100-hour weeks. Consistently, week after weeks. Compensation. An analyst's base salary might start at $120,000, but bonuses push it over $200,000. Managing directors command 7 figures, often multi-millions. Deals, however, are measured in billions. Your value is direct, your capacity to endure, to perform, to make the machine run. Relentlessly. You've seen the nights, you've felt the pressure, but we've only scratched the surface. You still don't know why some of the most brilliant analysts leave after just 2 years, what they find outside these gilded cages, or the silent cost they pay for their escape. And you still don't understand the final, devastating paradox that defines success here. You spent years becoming indispensable to the machine. You sacrificed everything to become the best. That's exactly why they'll never truly promote you beyond a certain point. Because you're too valuable exactly where you are. You built the cage. You just didn't realize it was around.